Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. I'm on a roll, butterflow, slow immerse, universe. I'm a curse. Mike's a wand, beats a pond I traverse. Every song is alone, so listen to reimburse. See, I'm flipping the script and giving you all whiplash. I put more in the message, call it pay to script hash. I'm lifting you in chat, so don't be so foolish. The chosen one, ready for a golden run. Foolish, we keep it sunny, rhyme funny, and it can't stop. My guest makes new money, call him Hamilton. Rob, damn, I'm handling blob data, slamming the clobs with bad beta. Everyone knows I'm damaging slobs, ripping bandages off. These economies need help, cause their management's soft. Dropping bodies in stealth till the damage is wrought. I go crazy, no lazy, most days we flow Swayze. Can't fade me, best raise me, Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. Rob Hamilton, CEO and founder of AnchorWatch, a Bitcoin insurance company. He's our guest, and he's going to talk a lot about inscriptions and ordinals. He's an expert, and also Miniscript, a fascinating new development on Bitcoin, a new programming language that enables a lot of new features that he's one of the only people on Earth building on. He'll teach us about that. We're also going to check in with our good friend, of course, Beimnet Abebe from Galaxy Trading. As always, we have a great, slightly longer than usual conversation with Beimnet about markets and the economy that I think you'll find really interesting. So look forward to that. But before we get into it, I must remind you to please refer to the link to the disclaimer on the podcast notes, and note that none of the information in this podcast constitutes investment advice or recommendation, offer, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. I'm feeling this beat, Finn. We got a good one. Let's get into the show. Let's go now to our friend Beimnet Abebe from Galaxy Digital Trading. My friend, how are you?
Good. Thanks for having me on.
As always, and I'm excited to talk because it's been a pretty exciting week. I remember last week we talked about higher for longer, a little bit of a repricing of the interest rate curve, but then there was some data that came out last week too that really caused equities to not do great. What happened?
So you had a pretty strong PCE print.
That's not CPI. What is that?
That's personal consumption expenditure. Is the Fed's preferred inflation measure, and it printed a 0.5 month on month, which is a really strong reading.
0.5 month over month inflation?
Yeah.
Wow.
0.5%.
That's what I mean. Yeah.
Yeah.
Wow, though. That's notable.
That's definitely pretty meaningful.
And then you annualize that to get to like the annualized? So,
yes.
Yeah.
But it's you don't annualize. It's the past 11 months of data combined with the current data to get your annualized.
But that was a bad reading?
Yeah. It basically confirmed what you had in the CPI reading, which is also 0.5 month on month. And so generally speaking, prices are rising at 0.5% month on month, around 6% a year. Which is not good, especially given that you've had somewhat tight monetary policy for the past 9 months.
You'd think it would be having more of an effect. You'd hope. You would hope it would be. Yeah.
So right now, I mean, today you got ISM prices paid that came in a lot stronger than expected. You had a 51 handle print when I think expectations were for like 47. So that's showing resilience in prices again. And what you've had is a further repricing of rates. And so now you're looking at terminal rates that are around 547, 550 area, which is higher than what any Fed person has really been talking about. So this is really one of the first few times where the market's aggressively getting ahead of the Fed.
Yep.
And that's kind of what's caused equities to come off a bit. And I'd also reiterate that cash is, again, a formidable alternative to owning any risk asset right now. Yeah. When you can earn, 4, 5, 6% on low duration stuff at no risk. Why take the risk of going into a risk asset?
Right.
So,
and the risk is, just to be clear, with you're talking about a treasury.
Yeah, it's just government default.
The risk is that the U.S. government defaults. That's the risk that exists, right? Unlikely.
If you talk to an economist, they'd tell you that's the risk-free rate.
Right.
So, honestly, if the U.S. government defaulted, it'd be probably the best thing that happened to Bitcoin in a really long time.
Yeah, I mean, it's one of these things
I'm dead ass. I'm lifting Bitcoin hand over fist if the U.S. government is defaulting. There are some scenarios where it's causing a big risk asset sell-off, but I think if people are going to start doubting money and the viability of money, Bitcoin seems like a pretty natural. Gold is probably the better I mean, this is probably the better risk-adjusted trade.
Yeah.
In that instance, but
Bitcoin has a role there.
I think with respect to the U.S. government defaulting, we don't have to spend that much time.
Right.
It.
I just throw that out there as the.
But yeah, it's really an event that is going to start impacting the market now. What it will lead to is this thing called extraordinary measures that the Treasury adopts.
And haven't they already been adopting? Right? Because we're already at the debt ceiling.
Correct.
But I think Secretary Yellen had said they can do those through like July or something.
Yeah.
So technically, the politicians can.
Yeah, you can get through July, probably like September, et cetera.
But at some point, obviously, the Congress has to figure this thing out.
Correct.
We're talking about the debt. They have to raise the debt ceiling.
But what happens is normally like the Treasury likes to keep money on the chance that they have outflows.
Sense. Yeah,
right?
That makes sense.
I think the minimum they keep, or it fluctuates, but it's like they need to keep like 5 days worth of outflows potentially, like in their account.
Yeah.
Right, and then a buffer, et cetera. And it moved around with COVID and stuff because the government had more things that could possibly like spend money on. So what happens is the Treasury is like, we don't have a huge debt limit, so we're going to keep a minimum cash amount on hand. And what that does is that takes Treasury supply out of the market, and it's a weird technical thing. But long story short, it shouldn't really impact the market that much. It's like well telegraphed. Every year that I've been in markets, it's like, oh shit, the debt ceiling. Oh shit, the debt ceiling. Notice that one T-bill just spiked in yield by a couple of basis points.
But they figure it out.
Yeah, they figure it out. Anyway, let's get back to
you're talking about risk assets, owning them over equities.
So high level, we have data that's really strong, prices that are still continuing to rise. But the prices that we're most concerned about are like the service sector related stuff, not the goods.
Yeah.
And the service things are still going to be tied pretty closely to employment, and employment's still at record lows.
So people feel
inflation's sticky.
Yeah, because people are willing to pay higher prices still, right? And that's because people feel they don't feel poor.
They don't.
En masse.
No.
And that's because they have good jobs.
And credit cards.
And their mortgages, if you have a home,
locked in,
you're locked in at a low rate, and home prices have been appreciating in a lot of places.
Or not depreciating that much.
Or holding pretty good, yeah. We were just talking before we started recording about this data that people are looking at, which is the new mortgage applications.
Yeah, I think they're down about like 40% year on year.
And it's at their lowest for decades.
Yes, correct.
So no one's taking out a new mortgage. Not no one, but very few people are taking out a new mortgage because the rates are so high.
Correct. But it's also, there's just,
But the wealth effect, right? Because if you have a home already and you can afford the mortgage because it's locked in at a lower rate, and the home is appreciating or holding its value, and you have a good job, right?
You're fine.
Like you feel like you can spend money, and so you do.
Because your disposable income
now, even if you're losing money in real terms because of inflation, which many people are, right? Because real wages aren't actually keeping up with inflation.
They are not. But the other thing,
but like still though, you feel like you're doing well, right? And that's so much of this is like, do you feel like you can spend money?
Here's the other big problem that I don't think the average American or the average person has really kind of gotten their heads. But like all the money people keep in their checking accounts and savings is earning nothing.
Yeah.
Right. So you're getting depreciated on your fiat if you're not in these bills at this point.
So you either spend it now or invest in instruments, right?
Yeah.
Like in treasuries or
keeping
equities, theoretically.
Keeping it in a bank account is probably the worst thing you can do right now.
I will say I saw there are some of the brokerage firms, obviously, because they run like money market funds. And there are sort of cash-like instruments like that feel a little bit like a savings account. But again, you're actually investing in like an institutional money market fund or
like Marcus offers
bond
like
fund. Yeah. So like, but yeah, the banks weren't they asked? They were when they had the bank CEOs, like when was it? Maybe in December or something before Congress. They asked some congressman or senator asked them like, why is my like a bank account paying 0.1% interest? And they're just like, oh yeah, like we're
competitive.
Like blah blah blah. And then it's like we're taking all that money.
Yeah,
the bank is
that's
making
really
all that
what
money.
it is.
Yeah.
But anyway, so services inflation's hot. Home prices, they haven't, and like rents, they haven't been coming off aggressively. And in fact, like the last CPI print, we had a 0.8 print month on month on the owner's equivalent rent. And we know that's backward looking. And Nick Timros, who's like the Fed reporter at the Journal, like that all the Fed people like, he recently published a piece earlier this week about like apartments. And generally speaking, like apartment rents have been coming down, and you should start to see that in the data a little bit.
Mm-hmm.
And then the other thing to keep in mind is, well, today commodities are a lot higher, but like commodities have been getting hosed for the past couple months.
Energy in particular is
nat
like,
gas.
oh my gosh.
Yeah. Thank
Absolutely.
God for the warm weather. Feels like
Remember, that
middle
was
of spring in February.
It literally does. Even today in New York, where it's like a little chilly, it's still like 40.
Yeah.
It's not like 20.
But yeah, I mean, the whole commodity complex has come off. So the good side of things has really...
Remember when lumber was like
lumber.
mooning?
Oh, yeah.
FTX launched lumber futures.
Oh, that's awesome.
Back then when that was.
What didn't they launch, though?
Oh, God.
It's crazy.
We should have known how degenerate they were separately. But let's go.
Hindsight. Yep.
Yeah. But yes, the commodities are off. The mortgages are sticky. People
Mortgages
have
are sticky,
jobs.
but apartment rents are going to come down.
Yeah.
The services stuff might stay sticky. I mean, I think that the U.S. inflation stuff is just a little overblown right now. Like prices will come down. Like having interest rates this high, like
it has to have an effect.
It has to have an effect, and it's also ongoing quantitative tightening, which is draining $95 billion of liquidity like every month.
Mm-hmm.
It's not just the U.S. doing it. It's like globally, like everyone's trying to slow shit down. What throws wrinkles into all of this is the Chinese reopening.
Yep.
And so, basically, like today, it was pretty big news. You had Chinese data that was really robust. So expansionary PMIs was, the headlines overnight. And long story short, you've got a nation of 1.3 billion people that's been saving money for 3 years. And now they can go out and do stuff and spend money and not wear masks, etc. There's some interesting terms that people like revenge spending.
I like that one because I feel like I did that when our lockdowns really lifted here.
Yeah.
Yeah, that makes a lot of sense. Okay, so I'm looking at the block clock over my shoulder. We're at 23.7 here today on Wednesday, but Bitcoin and crypto has been pretty resilient, and actually Bitcoin's still been leading the way. I think we just updated our year-to-date numbers. Year-to-date, Bitcoin on a risk-adjusted basis still the best performer.
I would guess it's
better
up
than
40% on the year.
Yeah, and still better than Ethereum, which has also been performing well.
Risk-adjusted, that Sharp is probably like something stupid.
Yeah. Even last week, right? I think it was the worst week in equities of this short year so far.
Mm-hmm.
But yet Bitcoin came down from like 24.8 to like 23.8.
I
pretty resilient here.
I think folks in the U.S. tend to get very U.S. centric about how they think about markets, and forget that Bitcoin is a global asset.
Mm-hmm.
And so I think part of the resilience in crypto has been related to kind of the influence in Asia or the crypto scene in Asia, right? With Hong Kong officially allowing
Hong Kong
unrestricted trading.
They put out a big regulatory framework that lays the groundwork for how companies can operate, and I mean very granularly. This is the thing we've talked about is what the U.S. has neglected to do, but UK has now done, Europe has now done, now Hong Kong has done. Again, a comprehensive framework that makes it possible and I dare say even easy for crypto firms to comply and offer services, right? Rather than a bunch of gray area stuff or God forbid, prohibition outright. Bullish.
I mean, I think that's been super constructive, whether it's in Asia or UK, as you mentioned. It's also, you've had a bunch of like Asian tokens that have done really well, like the Asian Polygon and the AI stuff. And Korea also has a pretty active, crypto community. I mean, they're the people that pumped Aptos.
Yeah,
right?
Aptos was that's where they did their big conference. Yeah.
Oh, yeah.
They had their conference there in Seoul.
Absolutely.
So a range of global factors also being supportive.
Global factors, that's really supportive. And then I also just think you kind of just have to see who's left, right? It's an industry that came apart in last year.
Yeah.
And so I think you're left with a bunch of strong hands.
Right.
Like all the people that were
to be
selling...
clear, like the coins didn't get destroyed. They got moved from like forced sellers into buyers.
Yes.
And who's buying at those low levels? Well, strong people, long-term convicted.
Absolutely.
Right.
Like if
So
you were scooping up Bitcoin at like 16, 17,000.
Yeah, you're not spooked by like
18,000.
24.5 going down to 23.8 at all.
Oh no,
At all.
You're thinking like 5-10 years down the line.
Yeah.
And I mean, I love looking at the weekly and the monthly Bitcoin charts. Like, if you're taking a step back and taking a real big picture view, like the chart says higher, not lower.
Yeah.
And 18. What was the Bitcoin low? 16.5,
even lower. 15.8 maybe it printed
15,
at one point. 15.5
on a
even.
flash or whatever.
Yeah,
right?
like during that act. But yeah, like call it 16.
So, yeah,
we were at 16.6 for like weeks. It felt like at one point. But yeah.
But it feels like a bottom now.
Yeah, it does.
Structural bottom in Bitcoin. And I think there's a lot of investors that did not pay attention when it was at the bottom. And now you have a product that trades like there's a ton of dip buyers in it.
Yeah.
Like, to give you an idea, there's been 10% dip this year in Bitcoin. It was very brief. And then you've had a couple of like 5% dips. But this thing, for being a 60, 70 vol asset class, like has given people very little amount of time to actually like load up on BTC at good levels.
Yeah.
Right. If it's an asset that, I mean, 20K's got to be huge support.
You think so at this point?
Huge support at this point.
I mean, right now we're ranging between like 20K and the 200-week moving average, which has historically been huge support, which we're below, which is in like 25 range, slowly coming down over time. So like that feels to me like the range at the moment.
Yeah, 25K is
and 25 just also as a mental.
I think
conceptual number.
I think if you take out 25, you're going to 28, but it seems like there's some strong resistance at 25. I just think that it's one of those things that you need to own right tails in.
Yeah.
You don't necessarily have to own Bitcoin, but like I think you're supposed to own the right tail of Bitcoin, which is swinging options or stuff like that, because I do think the FOMO is going to be pretty real.
When this thing moves, it's going to move.
It's going to gap.
Yeah. That's how it always has been, to be clear. That's just looking at Bitcoin historically.
In trading terms, the way you're supposed to think about it, it's always been spot up, vol up.
Yeah.
Right? And so when spot goes up, normally volatility goes up with it, because you get these like really gappy illiquid moves and FOMO, and people are short gamma and they got to cover.
Yeah.
And so, I definitely think that there's room for that kind of move to happen, but it's going to be really tough for that to happen absent risk assets doing well, which is going to be, again, really tough because
a big long story on
you're in a 5.5% interest rate environment now. And so it's tricky. Like Bitcoin, I think if we were in a 2.5% interest rate environment, would be
easier.
It would be a lot higher. But you can say that with anything.
We got the macro thing to worry about. That's all we can.
The macro's a big
it is for sure. This is a great conversation, Bim. As always, great to have you, and we'll catch you next week, my friend. Thank you. Welcome, Rob Hamilton, CEO and co-founder of AnchorWatch. Bitcoiner and developer. Welcome to the show. Welcome to Galaxy Brains.
Longtime fan. Happy to be on the show.
I think fans of the show will be excited to know that I think at the end of this interview, Rob's going to try his hand at the lyrical profession. He's got a rap.
Yeah, I encourage you all to not rush to the end. You should savor the journey that will be this podcast, and then you can clip that and listen to it on a loop as you make it your ringtone.
So we're going to talk about a couple interesting things. It's so interesting. One of the first things I wanted to talk to you about was Miniscript, which is a new Bitcoin programming language that can compile down into Bitcoin script, which is what Bitcoin uses.
Yeah.
You're one of the few people on Earth that's actually building something with it. So we're going to talk about that in a second, and then we're also going to talk about one of the hot topics in Bitcoin, which is inscriptions and ordinals. These, for lack of a better shorthand, Bitcoin NFTs.
Digital artifacts.
Thank you, digital.
Casey would correct you on that.
I appreciate that. Like NFT is also such a terrible term, by the way. Like the fact that this is what the Ethereum community, it's a technical term for the type of token it is.
Yeah, it speaks to just in general, developers are not good at marketing.
Yeah.
And they kind of catch fire with their own terms, and then everyone kind of gets dragged along for the ride.
Yeah. And then we're going to talk about AnchorWatch, your venture that you guys are building, an insurance company for crypto crypto people, for Bitcoin and ETH specifically, right?
Yeah, absolutely. So we have a full
That's
agenda.
the agenda.
We have a lot to dive into, so let's get into it.
Let's talk about Miniscript. So first of all, I remember Andrew Polstra actually had come to Boston BitDevs. I know, I think he was doing the rounds because you sent me the one of him in London. This was now maybe like 3 years ago.
Yep.
And so we were hosting, we used to give up at Fidelity, one of our big auditoriums all the time for BitDevs, like many good companies do. I know in New York, I won't name the companies for privacy reasons, but nice big companies often give space. And I went to this one, and I remember being like, "What the hell is this?" And it seemed super interesting. But then, that was that's the last I heard of it. And then, but it's in Bitcoin Core. It's actually available for use.
Yes,
you're using it. Tell us what it is.
Yeah. So when Satoshi Nakamoto invented Bitcoin, he not only wrote the whole protocol and those different pieces, he also invented his own programming language. That programming language is called Bitcoin Script. And think of this as the instructions that you use to prove that you own a given unspent transaction output, UTXO as we call it, and you reveal the information associated with that script and allows you to spend. And when you broadcast a transaction to the network, all of the nodes in the network run the Bitcoin script to validate, is this a good transaction or not? So Bitcoin script is a reverse stack fourth-like language. I would put it in the category of a series of instructions, very simple. And a lot of the use cases that we use Bitcoin for today use these instructions are called opcodes, operational codes. And these opcodes are very basic in what we use today mostly. Op check sig. True, false. Is this a valid signature or not? Op check multisig. Is this multi-signature valid or not? In truth, there's 256 opcodes in Bitcoin. They already exist in, a base 2 number.
Yeah, what a great number too.
Exactly.
We love 256.
Yeah, so there's 256 opcodes. If you look at them, about 150 of them are not usable because Bitcoin, in its consensus, you can't change the rules once they're in motion. So there's a bunch of opcodes which are just total graveyards. If you execute them in a script, the script will fail. If they are even present in a script, they sometimes will fail, depending on out of these 256. They all have different kind of conditions. Which one it is.
Some of them will, though.
There's 50 of them which could have utility on a day-to-day basis. And what Andrew Polstra, Director of Research at Blockstream, and Peter Will, one of the prolific lead maintainers of Bitcoin Core, came together in understanding and saying, if we could take a subset of these opcodes, can we make them interoperable in a way that we can unlock more complex Bitcoin smart contract language, truly, on Bitcoin? And this became the project Miniscript. It started in 2018. I think there was live code for people to mess around with in 2020 when Andrew Polstra was making the rounds. And the biggest things I would want to call out is this enables things like in a legacy multisig today, a 2 of 3. Let's say you have one key, you leave one key with your lawyer, you leave one key with a custodian. Your biggest concern is, well, wait a second, what if the custodian and the lawyer run off with my money? All keys are equal. There's no hierarchy. With Miniscript, you actually could add governance layers using and or statements. So and is really critical for, you could say my key signs and one of these other two. Right? Another example would be an or statement, which allows you to have kind of hierarchies of different security outcomes. The most straightforward one people think of is what's called a degrading multisig. Degrading multisig saying, let's say I have a 5 of 5, but maybe after 6 months I haven't signed, it becomes a 4 of 5, and then a 3 of 5, and a 2 of 5, and so on. And this leverages something which in Bitcoin is already natively supported today called a time lock. A time lock being you're going to have a certain constraint based on time passing on when you can actually unlock a certain spend condition. And when you take all of these Lego bricks, it actually uses 20 opcodes.
Wow.
You get really advanced, nuanced, smart contracts on Bitcoin that allow you to have much more power in being able to program your money and how you're custodying it. And I think this is going to be a major step function going from single sig to multi-sig, which happened around 2017. We're now entering this era now where the development tools are there and live, where you can go from legacy multi-sig to Miniscript. And this is how large institutional sums of money are going to be governed going forward.
I love to hear that. Multisig was a step change, and that's basically how all Bitcoin custodians do custody. Some are probably using some kind of multi-party computation tricks as well. But this, you take a large custodian, at its core, they have a multi-sig setup for the assets, but then they're applying those governance features in their process, right? They're saying, well, the chief of compliance has to sign, right? One of them has to be him or her, and then two of the others have to be from the bunkers we have out in the world, right, or whatever.
Exactly.
But they can't actually program that logic directly into the actual multi-sig. They have to apply it as a layer on top as part of their process.
1,000% true. And as a quick nod to AnchorWatch, the insurance company that I am building, we're building our own wallet called Trident Wallet, which is going to be powered and enabled by Miniscript. And our core thesis here is that we can actually take the smart contracting on-chain governance and have a hybrid approach of off-chain compliance and monitoring to make sure that they're synergistically working together.
Yep.
So you don't have to you can actually have this is the chief compliance officer's key, and they can sit in the hierarchy, and as opposed to it being something that operates in meat space, it could operate in code, and it allows us to further de-risk things and have really powerful use cases.
Let's talk a little bit about that de-risking. I guess technically the agenda we laid out, I'm skipping ahead a little bit, but from an insurance standpoint, if you can de-risk custody further and provably so, what's the benefit there?
Yeah, so the insurance infrastructure as it exists today in the larger cryptocurrency industry is very undercapitalized, and I would call a bit legacy modeling of insurance. You leave all of your keys at a single custodian, and because of that, it doesn't matter how fancy your cryptography is, you have a centralizing risk of all of the eggs being in one place, right? And that centralizing of risk is toxic to insurance and people that are paying for risk. So our thesis and our model is a multi-institutional custody model where you can have a distribution of keys. We have digital programmable money with Bitcoin. We should be treating this like the unique asset it is instead of something like gold bars in a safe, which is really how it's being applied to right now. And that's why there's very limited insurance solutions that are out there. And we believe that this is part of core Bitcoin financial infrastructure to be able to increase institutional adoption and have additional comfort as well. If you have a small percent allocation for alternative assets as a portfolio manager or running a family office, you're already taking the risk of the price volatility and the fact that you could get hacked and stolen and lose your money. We believe insurance is part of that. Risk financing is a very critical part of just ecosystem infrastructure that needs to happen. And if you look over the past 6 months, you can just tell that this is the equivalent of no underwriter ever would have touched these kind of risks. If you looked at FTX, they didn't have a cold wallet, right? You're paying for the risk, even if you're not paying an insurance premium, you're just paying it as a hidden cost. And we believe that making those costs transparent and putting it out there on the table is the way to really move this industry to the next steps of being able to be integrated into the larger financial system.
That's great. I think, when I haven't looked at crypto custody insurance in a little while, but when I did a couple years ago, really all that was there, and you hear this, there's insurance, and they got an insurance on their hot wallet. Some exchange may or may not. Typically, it's really cyber insurance that they're buying. Right? Because that's how the insurance companies are thinking about it. Yeah. And they're not very big policies. They certainly do not cover today all of the assets that are held at these custodians. That's why it's usually like our hot wallet is. Yeah. Because they're only able to get like $50 or $100 million of coverage at most.
And they're managing billions, if not 10 billion plus in assets. I call it fractional insurance. Yeah. So if you have a mass total loss event, you're getting paid 1 to 2 pennies on the dollar. It's not really insurance.
Right.
And it's just really it's really unfortunate. I think that our approach as well is thinking about wrapping this more in more of a traditional property and casualty wrapper as opposed to insurance. Cyber insurance is a very new and developing industry, and it has very hard to kind of price that risk. Whereas with our leverage and ability of using hardware wallets, geographic distribution, air gaps, this is something that's a physical problem.
And you think you can quantify that and underwrite that risk, especially if they use some of the schema that you're developing.
That's exactly right. Yeah. So further distribution of just not this is our security setup, but if you start introducing questions of you need to not only compromise one institution, you need to compromise many. Additionally, us at AnchorWatch being a signer, we are extremely economically motivated to make sure your keys are safe, right? So you're also able to, in that distribution of risk, work with us and other institutions to spread this risk out to where it's not just can I get social engineered and lose all the money at the company like we've had with very many historic hacks in the past? Or you have an exploit in a hot wallet, if you remember back with the Bitfinex hacks and with BitGo, you have someone that is able to kind of through the back door pull out a bunch of money, where you have keys that were able to manage policy permission, API keys that could manage policy permissions and withdrawals. And all of a sudden, your safe wallet has a massive barnyard door that everyone's able to run through.
Yeah, that's always been one of the interesting questions I've had for custodians, the MPC folks as well, right? It's like, okay, I get that the thing is very secure, but what about the mechanism that directs the thing to act?
Exactly.
Right? And that's when you have those API breaches that, like, you know. So I think it's very interesting. I'm also interested, I mean, just on Miniscript specifically, like, are there any other types of like wacky things that this actually enables? Like, for example, we talk about covenants as something that, you know, you got 119, you got op vault, you can get some with any prev out, some other proposals that get us towards a vaulted custody model or other covenants uses, recursive covenants. Can we get any progress just through Miniscript on any of those ideas?
I would say what's interesting about Miniscript is no fork is required today, so we get to really fully explore what's possible now without a fork, right? So very simple things, a relative time lock, which we mentioned earlier. So that very quickly,
I love that degrading custody idea.
Degrading custody, but it also acts as like a dead man switch. So
that's what I mean.
Very specifically, you have two kinds of time locks in Bitcoin. You have check lock time verify, which is an absolute time locks, meaning at block height 1 million, you can use this spend path. Or check sequence verify, which is a relative time lock. And very specifically, when you're thinking about the check sequence verify, a relative time lock, you could start having your degrading custody. It's based on when the funds entered the UTXO. And then you can start doing very interesting features of doing self-sends and kind of like doing proof of life checks.
Yes, I like that a lot. And I like if I have, you know, a multi-sig set up for my personal Bitcoin, right? And if I can teach my loved one or loved ones to be able to access it in the event that I die. It'd be nice that it's like, well, let's say they screw it up or lose the key. Look, at least you might be out now, but in 10 years, it'll degrade and you'll be able to get it just by going to the collaborative custody provider or someone like that.
That's exactly right. And I think one of the other interesting pieces that's very underexplored, but it is in the tooling of Miniscript, are hash locks. And this is where you can get really interesting ideas of, it does not solve the Oracle problem, but if you want to be able to have some sort of interaction with the outside world, a hash lock, it's used in the Lightning Network today for your justice transactions. But just to take a step back, I could have a message and I hash it and I push that hash into the Bitcoin script. Meaning if I ever reveal the pre-image that what created that hash, you can maybe unlock additional spend conditions.
It's interesting.
It's really interesting.
So secret spend conditions.
Yeah, you can have
at a later time.
Yeah, so you can have a secret password where if that gets revealed, you now can unlock a certain branch.
That's cool.
Right. So this is an incredibly underdeveloped space that I believe is going to be a bit of a renaissance when it comes to what does it mean to build products and services in Bitcoin, whether they are decentralized ones, whether they're formal companies like us. This is really allowing it so that you don't have to be a Andrew Polstra, Peter Will wizard.
Right.
You can actually have the accessibility to this dev tools. And very quickly, Miniscript also compiles and optimizes for script size. So it will go through your entire script spending paths, will allow you to make sure that you're using the smallest possible script. And additionally, the visualization of the Miniscript policies, you're able to look at a quick visual glance and verify your participation in a quorum. And one last thing is that Miniscript policies are composable. So you could have your own like internal companies, like crazy schedule of like how does the money get spent, and you can plug that in as a single node into a larger Miniscript policy.
Wow.
So you can have it be this one condition is met at this one company with its own crazy elaborate policy as a 2 of 3. And what I love is just very simple things like I could have a 2 of 3 at me as the user, a 2 of 3 at the custodian, and a 2 of 3 of other parties as well.
You can stack them on top of each other and stuff.
Yeah, this really just changes the entire model, what it means to have custody of everything.
I love it. Let's talk about Inscriptions a little bit.
Would love to.
We had Casey Rotemore, creator of Inscriptions, or of the concept of doing
the Ord Father.
The Ord Father on our podcast a few weeks ago to talk about it. It's a great podcast. You should check that one out. It's been a few weeks since then, though.
Yeah.
And I think we here at Galaxy, myself, but also on our research team and the market has learned a lot about it since then and really come to some conclusions. So I want to talk about that. And I know you've been very involved and certainly very interested.
Yes.
First of all, what has been your involvement here? Because, you know, I think you hear Rob talking about Miniscript, and in general, if you don't know him, our audience, he's a talented Bitcoin coder. So this is interesting. What has been your involvement?
I find it fascinating from a design space of changing what it is to use Bitcoin and interact with it. So from there, my interest actually started really taking off when I went to Bitcoin Park last Wednesday. There was an open house night when Bitcoin Park, as a very quick shout out, is based out of Nashville. You and I were there in January for the mining summit.
Yep.
So every month they do an open house event, and this month was open source software and using open source software. And I was on a panel specifically talking about building businesses that use open source software, because Miniscript is not my invention. It is open source software.
Right.
And how do you build on that? So I was in town for that. And also the Bitcoin development kit team, the BDK team, was also in town. And it was an amazing opportunity to work closely with them, because a lot of our backend infrastructure is built using that. And having more time to directly talk to the engineers who are using that gives us a lot of great insight and kind of exchanging of product roadmaps and different pieces like that. So that's my original intention of why I was in town.
Right.
It just so happened that Casey was in town as well doing an Inscriptions workshop. Now, I was traveling. This is the week of February 7th. I was end of January was actually syncing up my Ordinal node wallet to start playing around with it, and it was fully live and ready to go. So I had a mainnet node ready to go and start doing the actual live inscriptions. And because of that, I showed up to Bitcoin Park as like the one person who was able to do inscriptions live on site. And then I started becoming a DJ with taking instead of taking song requests, taking inscription requests, and people were giving me Sats cards, and
This
I was
is like
scripting.
OTC inscribing.
You know, I'm a horrible business person, I guess, because I was just doing it for friends and doing it at cost. I wasn't trying to do anything. I actually haven't minted an inscription for myself yet. Funny enough,
I got my avatars on there. Inscription 10,888.
Well, there you go.
It's a pretty
It's a
low
great
number, guys.
10,888. No, it's a great number.
You think a picture of Alex Thorne is worth any money?
I think you could talk to your wife and maybe she'll buy it.
Exactly. I love that.
So very fascinating and playing around with all of it. And then
It's a new design space. If nothing else, that's interesting.
And that's what I find really interesting. It also, from a narrative perspective, changes what it is to use Bitcoin, because Casey did it the Bitcoin way. He did it within the rules of Bitcoin. He didn't ask for a fork. He didn't ask for any new changes. He looked at it and he ran with it. And at a very quick technical level, the big unlock here was for the Taproot upgrade, BIP 342 removed the script size limit to be able to do more advanced Taproot transactions.
The idea behind this at the time, I guess, and educate me here, is Taproot unlocks a lot of more advanced scripting, and we didn't want to, the Bitcoin developers didn't want to limit that. They want, and that could be like, I don't know, making this up, but huge multi-sigs or other weird stuff.
Yeah,
But this was not raised. I think this was one of the weird things about inscriptions. The idea that would also allow
arbitrary data,
a larger amount of arbitrary data to be posted.
Yeah.
That was not raised during the discussions about and the online debates about Taproot. And to me, that's actually pretty troubling that it wasn't raised and wasn't flagged, because I think the Bitcoin, even I put myself in this camp. I think if you told me that Taproot would allow arbitrary data storage on Bitcoin, I think most of us would have opposed it.
Yeah, it's
now that it's here. To be clear, I think it's very cool, and I certainly don't want to unwind Taproot.
Right. It is a really interesting point, because this is one of the cultural hot touch points of Bitcoin throughout time. Originally, like, the op return was a lot larger. People started using bare multisig to be able to just push arbitrary data on chain. This is something that's been around for near the length of Bitcoin's existence, and it's really interesting that people forgot our history and culture a little bit to realize that once we opened up the floodgate, so to speak, people were going to use it for their own means and ends. The opportunity, I think, just now looking at how everyone's playing around with this is, I think the NFT phase is kind of like the first, just like very obvious synergistic use case, but there's a lot of interesting use cases. I think permanently it changes the security threat modeling and structure of what it is to run Bitcoin. And I think that's something that we haven't fully integrated with an understanding. The mempool may never clear again, because at 1 sat per vbyte, it's too cheap to push permanent data as a decentralized hard drive.
Yeah.
Decentralized hard drive is incredibly valuable. I think it's going to take years for us to fully kind of wrap our hand around what it means to have this now as part of the protocol.
Right. It's normal that, silly JPEGs are the first that get put there, especially given the broader crypto market.
Exactly.
But I agree. I'm hunting for and thinking about what the other real use cases can be. And I personally am pretty bullish on Bitcoin JPEGs. I am bullish on that. That is, look, NFTs are a large market in crypto. But I'm interested in what else can be done. I know Casey has talked about, for example, you can put like a JavaScript library in there, and then you can have another inscription refer to that library.
Yeah.
I don't know what that means exactly, but it seems like you can start building software that connects to the the chain and other interesting stuff
Absolutely, yeah. Someone already made an inscription parser in Python as an inscription. So you actually can invoke an inscription to look at other inscriptions. And I think as a very quick call and touch point, the ideological perspective of what it is to be an inscription means it has to be endogenous to Bitcoin. Bitcoin as a system works because it doesn't make any external reference to anything else. The only thing that is an external reference is the miners make a loose association based on what time it is and how much time's passed in between blocks.
Yep.
But that is all still enforced by proof of work, right? And there's actually the mean time passed, the MTP. There's a bunch of technical ways on how all of the miners in the nodes check each other to make sure no one's lying about the time. All to be said, Bitcoin is this internal system that only references itself.
Right.
Inscriptions have to be endogenous to Bitcoin because people have already started talking about, oh, I'm just going to make a pointer and push it off to this other. And okay, that does technically work and you can do that, but it is somewhat antithetical to the idea of what it is to have an inscription.
Right.
Because one of Casey's big touch points here, and he's very sensitive to, and I agree with this, is that consumer protection understanding. People were buying JPEGs on Ethereum, not realizing it was just pointing to an S3 bucket somewhere.
Right.
And that one day that server could get shut offline and what you thought you bought is now gone permanently. And what's interesting is that Bitcoin is now this place where people are using it for data storage. That has to be one of the pieces here. I think the idea of also being able to push code and being able to have interactions of these interactions of inscriptions, talking to other inscriptions, it's so early in understanding what that means for the impact of Bitcoin, not just from a fee market and the block space is never being empty again, but what does it mean to have this decentralized hard drive that everyone's going to be able to use for putting their data and how it's all going to interact with each other. Yeah. And then the actual tagging of the individual ordinal sats. I think that's actually going to be one of the larger plays is actually just finding rare sats and stuff.
Yeah, I think the ordinals are the Satoshis and
that's right.
The inscriptions are the data.
Yep.
And part of what Casey did with ordinal theory and his Ord wallet is not only make it a tool for uploading inscriptions, but also cataloging the sats and making it possible to sort of bind the sat to the inscription. But here's one thing that we've been thinking a lot about, and to me, this is actually when it comes to NFT use cases in particular, a little bit of I don't want to say a negative. It's not really there. Okay, so like you're right. So like you have NFTs on Ethereum, right?
Sure,
they're actual tokens. Now you're right. The data might not actually be there. So you got maybe no data, but you have I'm going to say a physical token, but a token that actually is recognized as existing by the consensus protocol.
That's right.
On Bitcoin, you have the data's there, but not really a token. In fact, the token, the binding only exists if you run a separate layer on top and you say, we're going to look at sats this way, right? And so I think it's a little deficient from a tooling standpoint for tokenization to Ethereum's setup, which is purpose-built for this. But you have this digital stone tablet in the Bitcoin ledger where you can actually have data availability there in a much more permanent way. So it's kind of like, to me, I've been trying to figure out, again, sticking just to the sort of NFT market use case as we know it today, like which types of NFT artwork might be better for one and not the other, right?
Yeah.
And I think there are some, to be clear. But that ordinal theory it's not really a real thing. Right? Or is it? How do you think about that?
Yeah, so it's interesting thinking through that. I think if you're thinking about the token and wrapping a token as an asset, wrapping it through more complicated smart contracts, those are all things that more benefited itself to Ethereum because of the open-ended nature of Solidity and being able to write the more complicated
and it's purpose-built for this.
Yeah. I do believe, though, that there's going to be more wallet support over time and understanding the ordinal stuff because at the end of the day, it's a shared hallucination.
Right.
And if everyone can opt into it and understand that, it can work. I
agree it can work. I agree. But I do think like it isn't a shared hallucination on Ethereum. Again, the token architecture. Right. That's real. Sure. There's plenty of shared hallucination going on in Ethereum and elsewhere, but not that specifically. Yeah. But I agree. I think you're right.
I think
if widely adopted, the ordinal theory, like then it will work. I agree. But I think that's one of the interesting things we've been thinking through is if you need like token existence more granular and defined, or if you need data availability more granular and defined, that may determine and sort of shape, again, thinking just about the JPEG market, right?
Sure.
What types of artwork might be more or less appropriate for Bitcoin versus ETH? There wasn't that ability to even have that question until recently. I think it's very exciting and interesting that there is that question, but I don't think it's going to look exactly like ETH's NFT market.
No, this is what's really interesting. And for me, I've been getting a lot of inbound questions and like, how does this all work? And I jokingly say, you're now in my playground. We're talking about Bitcoin, right? And the fact that all of this stuff is natively operated on Bitcoin's UTXO set and it uses Bitcoin security, I think there's a lot of new ways to understanding what it is to manage, share, transfer, doing marketplaces. I've been putting thought into like structurally
how you might do that.
Yeah. And I think ultimately the only tool that supports ordinals right now is the original command line reference implementation.
ORD.
ORD.
Yeah.
And I think what's going to happen, you will have interoperability though, because you can have shared consensus on these things.
Right.
And as long as you can have that shared consensus and everyone agrees to certain value, like the token may literally exist on Ethereum, but I guess maybe if you're thinking about like distributions of airdrops and other assets and doing that programmatically as opposed to manually, that could be maybe where that stuff comes in. This is a bit of a contrarian thing. I joke, I threw this out there and people started really hard pushing back on me. There's no reason why you couldn't take an ordinal SAT and wrap it into a token and put it on like Liquid or some other smart contracting platform and have all of that functionality of the token itself operating on a higher smart contracting layer, and then you bring the abstraction back down to the base chain.
Yep.
Right? I think that there's no reason why you couldn't do that, and it allows you to have your cake and eat it too with the data availability in combination with the token representative of an asset you could wrap into other use cases.
It's very, very interesting. So we're talking about Bitcoin and ETH and NFTs.
Yeah.
One of the things I saw that you guys, I guess you were doing it in Nashville, was that Jason Williams, formerly of Morgan Creek Digital, but also a well-known crypto investor and in general, he what did he do? He did something to one of his Bored Apes. He had a Bored Ape NFT.
Yes.
You know, Yuga Labs issued NFT. These are high value things, first of all.
Yeah.
What did he do?
So Casey dropped a tweet saying the first person to permanently burn their Ethereum Bored Ape Yacht Club or CryptoPunk as a one-way push over to an inscription will be an absolute legend. And then Jason tweeted as a reply, "Help me." He wanted to do that, and I saw that. I was like, and I tapped.
Perfect kind of guy for it. He's a well-known guy. He's been in crypto a long time. He can have, if it somehow failed, like or whatever, he'd be okay.
He did an interview talking about this, and he said it's kind of like throwing a Lamborghini into a trash compactor. It's really fun. That's how he described the whole interaction. So I told Casey, I was like, hey, I have someone. He wants to burn a monkey. And Casey was like, are you serious? And I was like, yeah, no, I know him. Like, he wants to burn the monkey. And then I was like, what do we do? He's like, we write code right now. Let's go.
We make it possible.
And we ran into the corner, and we were.
This is at Bitcoin Park, by the way.
At Bitcoin Park in Nashville.
Again, shout out Bitcoin Park. If you're in Nashville, 10th. You've got to check it out. Rod and Matt have done an awesome job with that thing. Love that. It's kind of like a Bitcoin WeWork.
Yeah.
But it's super nice. Also, I thought it was going to be more like a frat house, but this is like top tier space.
It's exceptionally clean, nice space. I am a national member, so it's kind of like if you come into town, I get to use that as my co-working space for myself and my company.
Yep.
They put on a really great show, but Casey pulls me aside.
Casey, you're there. You guys are, so now you're coding.
Yeah, so now we're coding. So we start talking about, okay, how do we make this reference pointer? And
because you don't want to just send. This was one of a lot of the sort of like they didn't know. A lot of the Ethereum criticism of Jason was, oh, you didn't send it to the burn address. But like, explain what you guys built.
You're in our house now. You're playing by Bitcoin rules, so we're not playing by your Ethereum rules. So very specifically, you want to have a one-to-one relationship between an inscription with the ordinal client on Bitcoin and an Ethereum address.
Yeah.
So Casey and I were discussing about what's the proper way to do this, and we came to the conclusion that each inscription ID is unique. And what you can do is you can hash that and truncate it and map it to specifically an Ethereum address. And the way this works is you take your inscription, you make it on an ordinal client, you hash it and code it using what's called teleburn, Casey's term, teleburn, teleport burn. And we sat there and he ran it through he wrote the code, the function. It was pretty straightforward. Don't want to get too much in the details. You take a hash of the inscription ID and you truncate it so it fits to an Ethereum address. So it's a unique one-to-one pointer.
You create an Ethereum address.
You create an Ethereum address deterministically
derived from your
inscription ID to prove for a fact that you didn't Jason's not holding the key anywhere.
Right.
And
because you're only deriving a public address. You don't know the key that underlies it.
Exactly. Yeah. And it's very straightforward to do as a code because the original Ethereum client did not encode a checksum. If it's all uppercase or all lowercase, there is no checksum in Ethereum.
Interesting.
Very bold design strategy to let someone typo yeet off their entire net worth, but that's what Vitalik decided is the best course of action. So we used that to write less lines of code. So we went through this entire process, and the first thing Casey did was he took his rotomar.eth and he ripped it to the Genesis inscription. Because he's only made one inscription, which was the Genesis.
That was the only one he's done.
That's the only one he's done.
Really cool, like a sort of Aztec-looking skull.
Yeah, like Day of the Dead. Like it's very cool. I love that one. Yeah. So that was so that's the Genesis inscription that Casey made, and he made
and he burned his .eth address
to that inscription.
Yeah. So now he theoretically. Okay, let's go back to Jason though. So Jason burns this punk and reissues it to himself or inscribes the image of
Bored
it.
Ape Yacht Club. It's a monkey.
Sorry, the monkey, not
Have
the punk.
some respect for the blonde Don.
My fault.
That's the nickname he has for it.
So his Bored Ape is now sitting visible on Ethereum in this address that he provably doesn't control.
Yeah.
Could you dice roll and somebody could just generate a new address and theoretically come up with the private key for that address on ETH?
Is deterministically possible. If you've ever seen those addresses on Bitcoin, though, like the one Bitcoin
vanity
eater,
addresses.
Vanity addresses that are so long and arbitrary, you just know for a fact it's like hiding in a needle in a haystack the size of like the universe.
So it's possible, but it's very hard.
It's computationally possible, but right.
That was one of the things that it's not specifically a dead address. It's just one that we probably don't have the key for.
It's one of 2 to the 160 possible addresses in Ethereum.
Yeah. Okay.
So at that point, you're equally likely just to find Vitalik's address or Coinbase's address, right? You're hiding in such a large stack. Like that security assumption is like at that point you're rolling the dice so many times, you're equally likely to find any other Ethereum address before you even find that one that actually has funds on it.
So he destroyed. Effectively, it still lives on ETH. You can see it. He teleported it.
It's ascended to the Bitcoin blockchain.
It's a one-way bridge, basically, what has been created.
It's a one-way bridge, and it's not been destroyed because it's living now as an ordinal. It's an inscription and an ordinal on the other side.
You're right. It's actually now on a digital stone tablet, one that is the most secure on Earth.
Exactly. Yeah, and it's kind of ascended.
Pretty funny.
It's very interesting.
This is a troll, right? I mean, Jason's trolling here.
I think it's a very legitimate statement, and we're already talking about this idea of like art and like where does it live. All of the ordinal client is a shared hallucination, right? Like there is nothing in Bitcoin code that says this is ordinal number this. This is all art and aesthetics, and these are all things that are cultural movements. So I would push back and say that it's a silly troll because I've had at least 5 to 7 different people messaging me asking, can you make me a Teleburn address for my asset? People are starting to run off with this and understanding that you want to have permanence of your asset. This is the way to do it.
Yeah. So there's a lot of issues at play. We've talked to some of them at Casey. With Casey, we've got a report we're preparing on inscriptions and ordinals that sort of documents for those who haven't been in the weeds, say on Bitcoin Twitter and elsewhere on the debates around like, is this good or bad?
Right.
I'm not going to preview too much of that except to say that I think on a net basis, we're very, very positive on inscriptions, both for the network, for the various use cases, for the security of Bitcoin, for a whole bunch of reasons. So let's not hash those out. But it really is, I think it's very, very positive and interesting that now Bitcoin and Bitcoiners are playing in this large market. I mean, NFTs did like 19 or $20 billion in trade volume in 2021 alone, which is, about half of what the Art Basel says that the world's art market was.
We're not playing in it. We're going to own it.
Yeah.
Bitcoin's going to own this.
It's interesting.
This is where and how early this is, I think we now have I would say also a larger capital base of people that are playing around in Bitcoin, the tooling and the developer workspace. It's
early, but it's coming.
It's early and it's coming, and it's this is going to be the cultural Marxism. Like you get to this stuff, like the cat's out of the bag. You're not going to be able to put this back in the box. And I think you have the synergy now. I've never seen simultaneously people in Bitcoin. Like I've had a lot of Bitcoin people who do longtime community members, people that are very involved in the space that are begging me to work with them to send inscription. This is culturally out of the gate.
It's really interesting though. There is still pushback. So this is creating a very healthy and interesting, robust discussion around what Bitcoin is supposed to be used for.
Well, this is the thing. Bitcoin exists, and it's very ironic to me that people talking about this decentralized governless movement, Bitcoin taking pride that code actually is law, right? That was always the jab at Ethereum, like, well, code's not law, because you guys, you undid the rollback.
Yeah,
right?
you did the DAO hack, and Right.
Yeah. So
Technically, I believe they refer to that as an irregular state transition.
Oh yeah, they're totally right. That's what the marketing team came up with.
Because they didn't actually, in their defense, yes, they did, and that's
it wasn't a literal rollback because they didn't undo.
Yeah, they didn't actually roll back the blocks. They actually just dipped into them and reversed specific things.
It's also not a rollback if you just give me all
they
of
just
Satoshi's
stole funds from addresses.
Well, that's what I mean. If you just give me all of Satoshi's coins and not roll back the chain, I'm totally fine with that too.
Right,
Right?
exactly.
It has the same economic outcome.
I like that.
But the point being is that this was all done within the design space of Bitcoin, and Bitcoin is for enemies and has to be an adversarial workspace. And I think genuinely the only option left is if you don't like it, you can ignore it or you can fork it.
And you can't ignore it.
You absolutely can ignore it.
You can discard witness data. You can only validate, up through assume valid. You can use the checkpoint. You can, not run ORD. You cannot recognize ordinal theory. There's plenty of ways, I think, to ignore it.
Yeah, and I think the responsible thing to do if you're an ORD disrespecter is to give it a couple months, maybe a year, to understand is this going to die? Because a lot of critics would say this is just a fad, and everyone in 6 months is going to be crying over spilled grapes. Totally possible.
Yeah.
I don't think likely or probabilistic, but it could happen. So because you don't want to hastily have a fork. But I think genuinely, if you're trying to change this, you want to fork and maybe decrease the block size because you don't want to actually fork out ordinals because then you're just going to have other ways of embedding the data.
Right.
And actually, the way that Casey's done this with witness data is actually much more healthy for the blockchain as opposed to storing it in like different UTXOs.
Right, it's extremely elegant, the solution.
Your node doesn't have to validate it. It's wrapped in an false op-if statement, meaning that your node never has to validate the JPEG. It does skip it.
Yeah.
It literally does skip it. It's not signature validation that needs to take into consideration. Forking is the way to do this with a decreased block size.
Yep.
I think that's the only way that if you're going to maintain consensus and try and build a coalition, it then does have Pete Rizzo, I believe, calls the degens paradox, in that the moment you try to like change this behavior and move it out of Bitcoin, it makes the ones that predate that more valuable.
Yeah.
So that this is a real structural problem that you need to start thinking about of like, it's an evolving market. It's an anarchic leaderless movement. And you have to understand that if you want to do a change, you can do it, but you have to start building a coalition. That takes time. You don't unilaterally just come down from on high and say, this is no longer allowed, because that's not how Bitcoin works.
Yeah.
The miners love this too. So you have a large percentage of the
users
that love this.
There's a large coalition that likes it.
There's a large coalition that likes it. And the only thing I think that could possibly be done is a block size decrease. You're not going to be able to remove this though.
Yeah. Not without rolling back essential features like SegWit and Taproot that people want for other reasons, right? It's basically impossible.
And you could try to do very specific edits of like removing ordinals, but then they're just going to find new ways to encode it. And then so it's a cat and mouse game that you're never going to win. You're better off. I think the easiest way is the block size decrease.
Rob Hamilton, co-founder, CEO of AnchorWatch. Before we wrap, you're going to wrap.
That's right.
Rob's written a rap. He's challenging intangible coins here.
Oh, no challenge. Just an ode of nod of respect for the medium.
This. He's going to do it as spoken word. Let's hear it, baby.
Check it. I got something new that'll keep your Bitcoin safe. You better not snooze. Trident Wallet, powered by Miniscript, will make sure your Bitcoin is secure. Do not trip. Miniscript is the key. Let me tell you why. If you sink on a boat, I'll keep your coins dry. We'll set up a contract, a smart one at that. It'll have some conditions so your Bitcoin won't go splat. With time locks, we give you more control. Different spending conditions as time takes its toll.
Let's go.
Trident Wallet's got your back with secure code. Your Bitcoin's insured, safe in your node. So tune in today and give the show a listen. You'll learn about Bitcoin and AnchorWatch's mission. It's an honor to arrive on Galaxy Brains. Missing a chance to do an intro with Alex? You gotta be insane.
Let's go. Rob Hamilton, CEO, co-founder of AnchorWatch. Thank you so much, my friend.
Thanks for having me on.
That's it for this episode of Galaxy Brains. Thank you to our guests, Rob Hamilton and Beimnet Abebe. This is our 50th episode, and we love making this show for you. It takes a whole team of people to do it. So thank you to Phineas and Badir and Jesse and Kat and Sebastian and Sammy and Xander and Ellen and many others who have helped us. And thank you to our listeners for joining us every week. We love putting the show on for you. And so we'll see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXYResearch. See you next week.